So why would we want to invest anything but US stocks right now?
Right. I mean, we could just rewind right back to the beginning, right, and talk through many of the topics that we have, because you don't know exactly when things are going to turn, and valuations can matter over the long run, right? They don't matter. They don't always correlate in the short run, because things can get out of hand with expansions, the multiple expansions. People are willing to pay more for things that have done well. But when it turns, it is painful. I remember working with clients in the 2000s period. It is difficult to remember that now, right? For many people, if you don't do it daily, it's really easy to ignore it. But if you're a retiree, or if you're somebody thinking about retiring, and you have what we see every day, much of their allocation is dominated by U.S. stocks, right? And U.S. growth in particular, it can be extremely dangerous. How are you going to feel if that is cut 30, 40%, 50% potentially, if it's a really bad scenario and you're looking to retire? How's that going to change that decision making? What if you're invested in a company stock specifically? Because we talk with more and more people, right, that are involved in that. I mean, it's exciting to think about how AI could change the world, right? But how much of an influence is that going to have? And then what competitors? We just saw this week, there's a potential competitor that could do it much cheaper. And that can, throw things into a crazy storm of people making changes based on that. So the diversification allows you to guard against the unforeseeable risk. And that is what we are trying to do for clients, is to understand where they are in their financial strategy,